What's going on, guys? Welcome back to the channel. My name is Mark and this is Entrepreneurial Finance. In today's video, we're going to be talking about 4 reasons why I believe the stock market is going to be going down within the next couple months. Okay, so if you watched my video last week, 3 reasons why the stock market could potentially be going higher. A lot of the message is going to be the same in this video, except I'm going to look at the stock market from a different lens, and we're going to look at it from more of a bear's point of view. So in my previous video, I outlined the 3 reasons why I believe the stock market will go higher, kind of looking at it through the lens of a bull investor. And in today's video, we're going to do the opposite, okay? And if you watched my video last week, you'll know that what I'm preaching is that I'm not trying to sway your opinion any given way. Whether you believe the market's going higher, whether you believe the market's going lower, in the long term, the stock market has always proven to be a good investment. So if you're able to continually invest over time, through, let's say, by putting away a portion of your paychecks each month or each bi-weekly period, you're more likely to build and gain wealth over time than you will if you try to time the market, okay? So the message is going to be exactly the same in this video, but I'm going to give you 4 pessimistic reasons why the stock market may be going down from here. Okay, so the first point is that it's overvalued, okay? And I talked about this in a couple videos ago, but if you look at the famous Warren Buffett indicator, I call it, it's the Wilshire 5000 against the GDP of the overall market. You can see here that it's sitting at like 1.6, and it hasn't been this high since the tech bubble of the early 2000s, okay? So granted, valuations are at all-time highs. That's kind of scary when you think about it as an investor. If you're a first-time investor, maybe you're trying to invest in the stock market, you look at the market, see that it's all-time highs, maybe that scares you a bit because you don't know what the heck you're doing and you think you're going to lose money. Another point here is that Warren Buffett is accumulating cash for various reasons, but typically a lot of people do follow Warren Buffett's advice, and when he is accumulating cash, that's typically a sign that he is bearish on the stock market. Now, he did make an acquisition this week of a natural gas company for about $10 billion, so clearly he sees some value there. And if you have done any studying on Warren Buffett's methods of investing, you'll know he is pretty much the most famous value investor of all time. Okay, so part of this point is the all-time highs, and maybe one just example I'll give right now is the Tesla stock, okay? So Tesla is currently trading at, I think, about $1,500 a share right now, and a few months ago, it was as low as $200 a share. If you got in that low, you would have quintupled your money or something along those lines, okay? So just to point out, Tesla is trading at a higher market cap than Ford, GM, Chrysler, Daimler, and all these other car producers combined, and that's despite them having much lower revenue than all these companies, having sold much less cars than all these other companies, and they're trading at a combined market cap larger than all those major players in the car industry. Now, if that isn't a bubble, I don't know what is, okay? So I also saw a tweet that there's about $19 billion shorting Tesla stock right now, which is the largest ever out of any other company in history. And maybe just one last point on the overvaluation here. We've seen a couple bankrupt companies, so companies who declared for Chapter 11 bankruptcy, shoot up in value massively, okay? So if you want to talk about irrational investing and companies declaring that they basically don't have enough money to pay off their debt, let alone have any value in equity, this is irrational, about as irrational as it gets, okay? So Hertz is like a car rental company. Typically when people go on vacation, they'll rent cars, and that's a function that Hertz provides, okay? So basically they declared Chapter 11 bankruptcy, they went down to like 50 cents a share, and then within a couple days they shot up 900%, back up to $4.50. Now, just a good quote here, the market can stay irrational longer than you can stay solvent. So even though this is probably a miscalculation of the value of this company, the company is overvalued. That's basically my point here, okay? So second reason here is the Q2 earnings season. So for a few months now, we've known that Q2 is probably going to be pretty ugly when it comes to earnings, as well as earnings forecast for the rest of the year. It's kind of muddy. We don't know what's going on with this coronavirus. Is it gone? Well, it's obviously not gone, but we don't have a vaccine yet. We don't know when a vaccine is going to be ready. We don't know how this is going to change consumer sentiment in terms of shopping, in terms of vacationing, and we don't know what governments worldwide are going to be declaring as to what you can and can't do. Okay, so one thing I'll just outline here, there's always market laggards, meaning there's people that either didn't see the headlines at first or just sell off at a later date because they were more optimistic that maybe this vaccine would be ready sooner than expected, or that consumer sentiment wouldn't change. Okay, so the big drop off we saw in the value of the stock market in early March or late February, there's going to be people that held on through that period, and then maybe once they see Q2 earnings numbers, they will sell off at that point. Okay, so that's one potential outcome here. The other point here is we don't know how long coronavirus is going to last. I expect it to at least affect Q3 numbers and potentially spill into Q4. We have no idea what this is going to do to consumer behavior. Are they going to stop shopping? Are they only going to be shopping online, as we've seen major e-commerce companies shoot up in value like Amazon in the past couple months? Which maybe begs the question, is e-commerce a bubble currently? Third point is that companies are going to be a little bit more conscious of stock buybacks, okay? And if you don't know what a stock buyback is, it's typically when the company buys shares of its own company, okay? And then they get put into treasury shares, and they can basically release those shares whenever they want to put more shares on the market for people to purchase, okay? So what this does is artificially inflates the stock price of the company, okay? And one example I have here is that airlines spent nearly 95% of their free cash flow in the past decade on stock buybacks, okay? So if you want to talk about artificially inflating the value of a company, just look at the airlines, look at how much free cash flow they use to purchase their own shares and inflate their stock price. Obviously, that was one of the industries that was hit the hardest by the coronavirus. And basically, analysts or the new retail investors to the market that have started investing throughout this period might realize, or will realize at a later date, that a lot of these companies that are using stock buybacks as a means to push up their share value, in fact, that these companies aren't worth as much, and there isn't as much innovation going on at the companies as some people believe. Fourth and final point here is that the election in the US that is set to happen in November is going to change the sentiment of the stock market. Now, I'm not making this a political video. This is not a political channel. I live up in Canada, so I kind of, have a bird's eye view of what's going on in the States. But I don't think it really matters who wins the election. I think the election in general will change the sentiment of the stock market. Now, let me explain, okay? A lot of presidents, or in fact, I talked about this in my last video, the economy typically needs to do well on an election year for the incumbent president to be reelected, okay? So I'll show up the graph here that I showed up on the previous video, but you can see GDP is typically higher on election years than it is on any other year, okay? So basically, let's say, or the current administration has been doing everything that they can to keep the economy running and doing as well as possible despite these unforeseen circumstances and really these extraordinary times. Tons of stimulus packages, tons of money printing, and basically that's all probably motivated by the current administration wanting to be reelected. So whether that happens or not, after the election, there's going to be less motivation to use that as frequently and really prop up the stock market, which is kind of what's happening right now with the stimulus packages and the amount of debt these central banks are taking on worldwide. Okay, so those are my 4 points. Again, if you watched my previous video, you'll know I'm not trying to sway you in any given direction here. This is a channel focused on long-term investing. What you should do to accumulate and build wealth over time is continually invest. You should be saving a portion of your paycheck every bi-weekly period, okay? So it's not about timing the market, and that's the message in both of my last 2 videos, and I just want to hammer that home because I know that is the best way to accumulate wealth over time. Yes, it's not sexy. Nobody likes to get rich slowly, but it is, in fact, the best way to build wealth, okay? So I hope you guys enjoyed this video. If you did, don't forget to smash the like button. Share the video with a friend if you learned something, and I hope you guys enjoyed the content, okay? See you guys in the next video. Peace out.